Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive right in and take a look, see what is going on today. If you want to follow me, it's at @Finance. And if you want to join our community, finding-value.com, where I dive deeper into all these topics, looking for investment opportunities and sharing that with everyone in the community. You can see the coupon code in the corner there. We also have a question and answer session that is being conducted today at 5 p.m. Mountain Time on Sunday. So that is also available depending on when you're listening to this. If you'd like to join, you can jump on that Zoom meeting and ask me whatever you like. Spencer says Powell is a stupid, stubborn mule. Trump have instructed my people to not issue debt longer than 9 months. Financial repression, yield curve control is next. Massive inflation to follow. Throw out your dollars and bonds and go get more gold. And here's another one. Trump says he thinks the Fed should set interest rates at 1%. He also says we won't consider anyone for Fed chair who supports holding rates where they are. Whoever is in there will lower rates. On Powell's successor, I'm going to put somebody that wants to cut rates. So that's what's coming, guys. Now, we've got monster patterns. I mean, monster patterns in a lot of these different commodities. Is this going to be what sends commodities to the moon? Where they change the Fed chair, he lowers interest rates, and these things just break out of all of these massive patterns. Very well could be the case. We're already seeing some of these patterns break to the upside. For instance, gold being one of them, the leader, and then platinum, that's recently broken out. And these patterns are huge. They're not weekly patterns. They're not monthly patterns. No, these are multi-decade patterns. The bigger the base, the higher in space. And with these patterns starting to break, I think it's front running the inevitability here. This. People are positioning. The smart money, the insiders know what's coming. And they're already positioning. And then when this happens, the dollar is going to get smoked. I mean smoked if this happens. Because one, they have to get the interest rates down there. They're going to print money. They're going to buy bonds. And man, it's going to send everything in the commodity space, I think it's going to send it a lot higher. Smart Real Estate Bets, he says, this chart shows composite vacancy rates, owned and rented combined, and how they have correlated to interest rates over the past 60 years. People are welcome to believe that inverse correlation is coincidental, accidental, just like they are allowed to believe in the Easter Bunny. When housing, shelter inventory versus interest rates, when housing goes into crisis level, which is your shelter vacancies, your interest rate goes up. We also have another one where it went into crisis level and your interest rate goes up. Why is that? Is that because home prices are going up and more money is getting loaned into the system? Does it have something to do with money circulating in the system already? So maybe fiscal spending drives shelter vacancies down. Maybe it's a combination of money in the system and demographics at certain age groups, which I think that's the case. I think it's a combination of demographics in relationship to the housing market. And that interaction causes interest rates to go up or down. And then recently, it's more fiscal driven, in my opinion. So against all odds says copper is coiling up, not just any setup. This is a 20-year base. That's multi-decade. Now we're back at the top of the range. If it breaks out, it's not just copper going higher. It's the world saying we are building again. Now, here's the resistance area that we've got up there, very similar to how I drew it during my daily technical updates. We are just about to break out. Now, this is again a multi decade pattern. With Trump up above, remember he was saying, you know what, whoever I put in, we're going to put in and lower interest rates. Do you know what that's going to do to a chart like this? I mean, do you really understand? It's going to do something like that. It's going to do something just like that. It's the same setup. This setup here is this setup here. It's the same thing. And then we are going to get an explosive move of copper. Now, I've got silver here. Do you know what interest rates lowering would do to this chart here? It would send it to the moon. Um, I mean, my Lord. This is this. So I'm just looking at this. This here is wave one. Like we're entering wave three. This is going to be a monster move. This pattern, just to let you guys know, and I don't know if it's going to go the same exact, but we can shift it here um, pattern wise. That's the fractal. What I mean, and yeah, it goes to infinity. It goes to infinity. Now, obviously, we're not going to go to well, maybe we do, but um, all I'm saying is that the patterns here and the fractals, the way that these all look, are very similar, and we could see very big moves out in the future. And it seems like everything is aligning for that to occur. Here is copper. Obviously, we've got copper there. I'll pull up the last big one in copper. This is copper here. And I think that if we were to kind of line this up, and I grabbed that just to show you, that is this lead in pattern there. So three is three. And then this big move, I, I think that fractal there is this. Don't worry about what came before it. I'm just lining up so you guys can see the fractal of the way that this is moving. Then you're going to see a very big move. Now, I don't know if it's going to transpire to $240 or not. I'm just showing you that the fractal, the way it's moving, is very similar. I think we are going to get a very big vertical move out of this, potentially starting right now. Like we're right at the cusp of these moves. So again, I'll talk about this later today of one of the companies that I think looks really good to play this potential move in copper. I also have maybe a few others that may be pretty good or investments that are developers of potential mines. But this looks ridiculous. And obviously, here's platinum. Platinum is doing something uh, like all the other ones too. You can see the fractal is basically the same. The breakout here, the return move that we get before another big up leg. So if I were to compare this, and we'll see if I can size this up properly. I haven't sized this up, but so it would be something on the lines. I'm just going to try to get the overall um, sizing correct. This might be a little bit too big. Something on the lines of that. I mean, it's not perfect, but I think it'll do something like this, most likely, like that or something. We come up, we hit our head, we bounce back, and then we go. I've got a this one. rates like $20,000 on it's on log. So I mean that's a possibility too to get to 20,000 on platinum. But all of these are showing this move. They all have the 1, 2, 3, 1, 2, 3. This one is tucked underneath resistance. This one broke out through resistance. Is doing that same setup that gold did before it had a huge move. So gold is the front runner. It basically accounts for money printing real time. All of these are lagged behind it. Crude oil, copper, all of them. That they're going to be moving next. They're going to start popping off one after the other. They're scared with crude oil because crude oil is going to translate this all into inflation in the consumer price index and all these other things. Same with base metals like copper. And we're going to see a big increase probably of inflation. So we're right there. That's what it looks like. It's all about liquidity. The S&P 500 has been moving in sync with global M2 on an 11-week lag. It's signaling 6,800 plus for the SPX. You know what else this is signaling, or this big move up in liquidity? It's going to show up here. It's going to show up in all those other ones that we were just looking at. It's going to get into everything. Here's platinum, $4,000 by late 2027 if you use I think this is probably non-logarithmic. And what he did is he tied the tops here. He just said, you know what, I'll tie it like this. And he did it on non-log. So he did it on probably that. Well, log. So here, this is what's crazy. If I do it on log, I get this. If I touch the tops there, hit that, and then the fractal aligns pretty well with where this could potentially go with an upper trend line. Now, I don't know if this is going to match the bottom here. See, the bottom's curved out a little bit this way. And then what a lot of these guys do is they'll grab this and then angle it upward like that. And then they get some value out there. But this is what's coming. I don't know the ultimate top of it. This one showing like 7 or 8 grand is what I get. If they tighten it up, they get 4 if it's like over here. But I think we're going to be peaking where this shows it, like this one here. I think that's a pretty good estimate. And I even think it's possible to get where this is showing, which is $20,000 or so. I think it's a possibility. That's not my projection. A lot of people, they hear what they want to hear, and then they walk away. Oh, he projected 20,000. It's like, well, I mean, I said it's possible. If I were to put a range on possibilities of platinum, I would say something like 4,000 would be very low, and more aggressively, it would be 20 plus thousand is possible. But again, it all depends on what they do with interest rates. It depends on how much money they print, and the situation that not people, but the situation that we find ourselves in, and how people react to that situation. So if people start to panic and there's a run to safety away from the dollar and away from financial assets, then yeah, we could see ridiculous numbers. Gold, silver, platinum. And the thing that's scary here, because I'm a little bit scared when I look at these charts, they're so big, they're so vast, they've lasted for so long that when these things break, it's going to be an energy that is going to be unleashed when they go. I mean, maybe they take a long time to unwind higher. They could also take a very short time. I mean, what does this mean to the banking system if platinum and silver break these big patterns? What does that mean to all the people shorting it? Could be interesting to see how they fare with it. Warren Buffett says only buy something that you'd be perfectly happy to hold if the market shuts down for 10 years. So if it shuts down for 10 years, what companies and what characteristics and traits does the company need to have for you to hold it for 10 years? What sectors would you go into? What sectors would you avoid? I would I would be happy with the majority of companies that I own to hold them for 10 years. And I said majority. There are a couple speculative ones that I'd be like, kind of wishy-washy on. Brian says, how many stocks should you own? Too few is 0 to 10. Sweet spot is 15 to 20. And too complex is 25 plus. They say less than 15 stocks concentrates the risk, leaving your portfolio vulnerable to the performance of just a few companies. The sweet spot, owning 15 to 25 stocks, provides a good balance, diversifying risk while still allowing for significant gains. And too complex, which is over 25, more than 25 stocks may dilute your returns, making it harder to manage and track each investment. The key takeaways are to avoid under diversification by holding more than 10 stocks. Aim for 15 to 20 stocks for optimal balance and diversification. Be cautious with more than 25 stocks, as over diversification can dilute returns. This is total portfolio risk, and you can see risk goes down as you approach about 15 or 20. You get a bend at around 15, 20, and then the bend, you basically, I'll call it asymptotically. So asymptotically means you approach a value, market risk here, but you never reduce risk under a certain percentage point. So what you do, or what I do, when I buy value, let's say like a car or whatever it is, I try to go as far as I can. Like if this was price going up this way, I try to get it where like it goes up, and then right when it like knee bends, that's where you want to be. Like where it knee bends here, around 15 to 20, and that's exactly where the sweet spot is with respect to diversifying risk. It's always the knee bend. So that's kind of how I live my life. In all honesty, it's I'm buying a lot of products where the knee bend occurs, where I'm getting a lot of value out of whatever I'm getting if it's going this way, and then when it knee bends or jerks sideways, it's like you don't want to go out there. Your performance doesn't really increase very much, but your price might go way up. It's like the difference between buying a very expensive car versus a car that might get you 90% of the way there of that expensive car, but it only costs a tenth of the cost. Supercars are kind of like that. Supercars, they yes, they have really great value, but in turn, or I should say, they have really great performance, but they cost a ton of money. You can get 80, 90% of the performance in a car that is far less expensive. And that's kind of where I would shop if I'm looking for a performance car. Here's Warren Buffett. They've got a clip here, and I obviously listened to the clip beforehand. It says Warren Buffett and Charlie Munger both believe that business valuation is not being taught properly at business school. A Berkshire shareholder then asked them how they would teach business valuation, and this is what they said. And I basically, what if I were to sum it up, you can't really value a company very easily. A lot of people do these discounted cash flow models out in the future, but obviously those discounted cash flow models are not nearly anywhere near correct, because they have all these assumptions in it, and you get nowhere near a true valuation of the company. So what Warren Buffett basically has said is, what are the key characteristics that are driving the performance of that business or stock? And if you can understand the key characteristics that are driving it, and you have a good handle if those key characteristics are going to be better in the future or worse, then you have yourself a good idea of how to value that company. So let's talk commodities here. The commodity stocks are more or less their margins, and every single financial metric are dependent on the commodity itself. So when I look at commodity stocks, I'm not buying the balance sheet today. I'm buying the balance sheet in the future. And with respect to this, I'm looking at these particular commodities where they're squeezed up and breaking. So the balance sheet will be completely different as this moves up over time as you go through these X's. You can't predict where those X's will necessarily be, but if the commodity price is the main determining factor between its margins and the financial metrics, and I have good reason to suspect that we are going to go way higher in these charts like silver, copper, platinum that I showed today. Well, then I can look at companies and say, well, okay, if prices were to go up substantially, how does that impact the balance sheet? And is it worth investing in? And do we see positioning in the markets in those? So again, that's how I'm using it, and that's what I'm sharing on the website there. Bitcoin takes pressure off the dollar. Whoa, 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 time out here. Are they going to admit something here? So Bitcoin takes pressure off the dollar, or said another way, Bitcoin is a liquidity sponge and absorbs the monetary premium previously going to other assets, real estate, equities, and so forth. Dude, they're coming out and saying this, thereby allowing the dollar to continue to inflate without sending other assets as high as before, keeping homes, stocks in reach of the next generations. He says it takes a lot of pressure off the dollar and it's a great thing for our country. They're like coming out and like Freudian slipping this or something. I don't know. But that's exactly what I said Bitcoin was created to do. And it was created at the exact time that they were doing all of this QE money printing after 2008. Wow. Wow. So keep this in mind, everyone. Nobody wants Bitcoin. They want what Bitcoin can buy. They are taking advantage of all of the sheep that are going to run into it sheerly based off of price performance. Now, the price performance could continue to go up. That is very much the case. But they are literally using it as a liquidity sponge to soak it all up. That's what they're doing. HFI research says disciplined natural gas supplies. Structurally higher LNG feed gas equals a net gas supplies flat year over year. So we're seeing net gas supplies go up, but net natural gas supplies year over year is actually below zero. And what we're seeing is the total gas supply, we're producing more year over year, but we're sending it out on LNG gas exports. So as export capacity comes online, we're going to have to ramp natural gas production. And more of it is going to be shipped out overseas. Mexico is also going to be a bigger importer over time as Pemex has basically peaked and is rolling over. HFI research, big macro, long-term bull thesis on metallurgical coal says the long-term outlook for met coal is strong. Steel will continue to be used for centuries. It forms the main structural support in infrastructure, automobiles, both internal combustion engines and EVs, ships, buildings, and many other products and structures. Yes, it does. And it looks good. OPEC is likely to make another oil output hike of 411,000 barrels per day for August when 8 members meet on July 6th, says the sources. And that's all I've got for today, guys, because this is what I had before. So let's give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. Special is the coupon code over there. And we've got a Sunday question and answer session coming up this weekend. So we'll see you there if you decide to join. And that's all I've got for today. So we'll catch you later.